Yo guys, another trade recap today where I didn't take a trade. Good thing I didn't take a trade, to be honest. Let's go over it, honestly, straight into it. So, looking at the economic calendar, today's obviously Friday. As you guys know that I trade EUR USD, so yeah, we can see we had I have USD, GBP, and Euro because GBP and Euro are sort of correlated because they move similar. So we had some news that GBP didn't affect Euro. Sometimes what happened is there would be a news in GBP, right, and it would affect Euro, and that could cause the Euro pair to move crazy. And then you're like, oh, what the hell? There's no news in Euro. Why is it moving crazy? But when you actually go look at the news and GBP had something, you're like, oh, that's why. So we did have some news in GBP at 5:30. That wasn't an issue. Didn't affect us in any way. Small news at 6:30 p.m. on your USD. Spanish flash CPI. It's the orange folder. Orange folders are nothing to us. They don't do anything. So, in terms of news-wise, we were all good. Now, let's show you guys how today went. Let's make this bigger. Wait. Okay, so, on the daily, what do we see? Okay, so we can see price was initially trending upwards on the daily time frame. We can see this massive leg here, which tells us that price is bullish. But as you can see here, we have this leg down, and that disrespected this tiny imbalance here. Don't know if you guys can see. It's like very, very small. I don't think it matters, honestly, but I'm just pointing it out. So it's like from here, 743 to 755, right? So break through that and also break structure to the downside on the daily. So overall, looking at daily, I would say I'm pretty bearish because not only that, if you see this candle this week and the body the next day it closed below, determining that we are bearish. The drawn liquidity is lower, but not to forget that we are in a massive imbalance. This is a fair value gap. If you don't know what it is, I'm pretty sure every trader who understands what I'm saying knows what I'm talking about. So this is fair value gap. If you guys don't know what a fair value gap is, that's really important. You need to learn what it is, because if you don't understand what I'm saying, then you gotta do your research beforehand. You can watch my trade recaps because these are advanced, alright? Like, this is like me just laying out strat, psychology, everything they need to be profitable. So if you don't know what I'm talking about, you gotta really go do your research. Watch a few videos. I haven't made any myself explaining because I just feel like there's just so much out there. There are like 1,000 videos explaining order blocks, fair value gaps, equilibrium. So I just haven't done it myself. But I probably will soon. But if you don't know what I'm talking about, you gotta watch this first. Anyways, it was in an imbalance, but looking at what price is doing, we don't want to predict. We want to react. Good traders don't predict. We react to what market's doing. And my prediction would be, price comes into this fair value gap, right, and then goes up. But I want to react to it, and what I'm seeing right now is that price is trending down, right? So looking at the daily, my bias was bearish. Now, 4 hour. Alright. So 4 hour time frame telling us a completely different story. Like I said before, my daily bias. Looking at that, you say it's bullish, but it was actually, so my daily bias going for the end of the day was bearish. And I think that was heavily supported about the 4 hour as well. No, it was bullish. It was bullish. Right. my daily bias is bullish, and that was also supported by the 4-hour, because this was the wick down into the imbalance, right? And like I said before, we want to react, and yes, we do see price going downwards on the daily, right? But that's not enough to just determine daily bias. You gotta also look at recent price action, and looking on the 4-hour, we can see this pretty significant imbalance that was disrespected. This one here. So starting from this wick to there, we have an imbalance, and you can see this price move up, literally break through it. The body closed way above this wick. It just completely shot on the imbalance, right? So that means our draw on liquidity is obviously higher, yeah? Right, so 4 hours telling me that we are about to go bullish. Now, I go down to the 1 hour, okay? Now what's 1 hour telling me? Okay, we're gonna turn on this indicator. This is the only indicator I have. I think I've mentioned this before. This indicator tells me just the times of the sessions, what time sessions open. That way it helps me identify highs and lows of sessions, because those are important draws on liquidity. Yeah, so those important draws on liquidity, it's important to know how price moves in a certain session, because that's important. That's hella important, bro. So this is the only indicator I have, and just basically tells me, what happens in each session. So looking at here on the 1 hour, we have a lot of bearish order flow getting disrespected, right? So starting off with this massive imbalance, so you can just see it got rated, bro, crazy, right? Price, you could say sort of respected it, and before it disrespected this imbalance, let's turn this off a bit. And by the way, I think this was in New York session as well, right? This was in New York session. This imbalance is created, so them getting disrespected. I think there's got to be a change in the flow of the market. You could call it a reversal, I'd say. So you can happen to see a reversal. So this imbalance got destroyed by this price, right? This one, like we said, absolutely got shot on, right? 1, 2, 3. There's a wick here. The wicks did the damage, and then this candle here, they just closed above this. So disrespected that, and that tells us that we are going to be bullish, right? And now disrespecting bearish confluence and respecting bullish. When I say respecting, all right, we're gonna this price leg from here to there, right? We can see price come down into discount, right? Equilibrium, nearly touch OTE. If it doesn't touch OTE, optimal trade entry, that's fine as long as it's in discount. So it comes down, respects this imbalance, this imbalance, right? And you're probably saying, oh, Mickey, how is it disrespecting this imbalance, even though this candle's body literally closed below it, right? Close, yeah. Well, if you really look at it closely, right? So this is I'm gonna mark it the imbalance. I'm like teaching you guys stuff as I'm doing a trade recap, what a fair value gap is. So fair value gap is just like basically a gap, right, in price action, where a price moves too quick, and within this gap you have like pending orders yet to be filled. So what happens is price usually returns back into it, retraces into it, and then moves in its direction like it did here. So we have an imbalance here, a fair value gap, right, and then we have another one here and there. You can see price, it didn't. I'd say it didn't even disrespect this. I'll explain that in a minute how it didn't. It came down to this imbalance, right? It actually even wicked into this one with this little wick down, right? It tapped this imbalance as well, and then it went straight up, right? So back to what I was saying. Is that it respected all the imbalance, this and that. How's that? Okay, so this is the start of the imbalance, right? And you can see this candle here it wicked below, but it didn't close below this imbalance's low, right? Yeah, the start of the imbalance. So that means, for me to know, like for me, right, to know that this imbalance has been disrespected or invalidated, I need to see a candle now close below this low, right? That's how I would think that, okay, now that imbalance got shut on, right? But it didn't do that. You see the body closed above it, and this candle here wick down, and even this candle, this body closed above this wick. So that means we are still bullish. That's how I take it. It's been working for me, and I've seen like tens and hundreds, probably nearly hundreds of videos, trading videos. So I think, yeah, I'm pretty good with fair value gaps, to be honest, right? As you can see, like I said, it didn't change the order flow. It was still bearish. I'm bullish. Sorry, I keep getting mixed up. So still bullish. It came down and went up. Yeah. Now that tells me that we are bullish for the day. Right. Okay. Remove the joiners. Now, going to the 15-minute. This is where we mark our liquidity, right? Since our bias is bullish, what are we looking for? Sell side to be swept, market structure shift, or you can call it breaker structure, whatever you do, and entry into an order block or an imbalance aligned with an order block, right? And then we take it from there. All right, important draws on liquidity. So, New York session highs. This is another high formed in New York session. Asian session high. This is where the range opened, so I'd say it's pretty significant. And then we obviously have New York session lows and Asian session lows, right here. Alright, we want liquidity to be swept within our session in order for us to take a trade, right? Liquidity swept followed by a breaker structure and then a structure shift, okay? So, what happened? Trading starts at 2 o'clock. 2 o'clock. And this is the low, by the way. Sorry for getting it. Alright, this is the low. Trading starts at 2 o'clock, okay? 2:30, it sweeps the lows, and then we're gonna go to a 5-minute. Okay. Sweeps the low at 2:35. That's our sell side being swept, right? Now what we're looking for is a breaker structure, or actually a structure shift, right? And then an entry of an imbalance or order block. Let me go to 1 minute to show you guys why I didn't take this trade. And it was a good idea because, it just went down. And if I wasn't a trader, I would have taken a massive loss. So I ended up avoiding it, and that's a good thing, right? Okay, so this was the sweep, right? Swept it. Now what I look for is, I not only look for a sell side to be swept, but I also look for some sort of internal liquidity to be swept, right? That's just market's way of manipulating the traders, right, and make them hit their stop losses. So I learned that over market, spending time in markets and back testing, forward testing, right? So what I look for is some sort of internal liquidity. So market swept, sell side liquidity went up, and then the only thing I was waiting for was internal liquidity to be swept, which would be around here. And after the internal liquidity being swept, I would look for my market structure shift. But what happened? Yes, market did go crazy up, right? And I probably would have won this trade, right? Let's just say this is on market structure shift. Right? This is on market structure shift. Actually, let's make this deal. Right? Stops below the low. Okay. So I would get into here. I'd get entered, and yeah, I would, look, and yeah, as you can see, I don't even get my 1 to 2 risk reward in here, right? Stops below the low, market structure shift. What I do, I would place my entry on the body of the breaker block, and I get tapped in, and I don't even get my 1 to 2. Right, my 1 to 2 would be literally on the session highs, right? And that's just one thing I've learned over the years, that taking a trade where I don't see any sort of internal liquidity sweep, I just get stopped out. The price goes in opposite my direction. It sweeps the internal, right? That means it runs my stops. I'm out of the trade, and then it goes like 2 to 3 risk reward. Like wherever I want it to go. So I was disciplined, and the crazy thing, right? This is the crazy thing. What are we trading to? 2.5, yeah. So let's just mark it out. Oh, that's enough. Okay, so you can see it didn't sweep any internal liquidity. It went up. It didn't cross Asian highs, right? It went down. Swept these highs, right? This is the internal liquidity, right? It swept this. Now what I would do? Now I would look for an entry because it's in my session. It's done what I wanted to do. Right, sell side, swept, followed by internal. Now I'm looking for a market structure shift for an entry, okay? So, this is how I would have entered, right? So, this would be my... So this week here is what would determine my market structure shift. So what I would do is stops below the low, right? Once price closes above this wick, right, the body, I would enter, and I'd probably enter the body, right? But that's not what the price did, and that's why this trade seemed very dodgy to me. Okay, the wicks did damage here. It closed above right here. Okay. Yes, I could count this as a market structure shift, but I went onto the 5 minute, right? I went onto the 5 minute, and I could see, even though it disrespected this imbalance and this one, right? So that could be a pretty good confidence for you to enter a trade, because you'd be like, all right, swept all the liquidities I wanted to, right? Gave me a market structure shift. Also, it's invalidating 5 minute imbalances, right? But here's what I did. I went onto the 15 minute, right, quickly, and then I saw, okay, the price like that went up, right? It took out this high, retraced back into this 15 minute imbalance. Didn't disrespect it, so that means it's holding bearish order flow, right? That means you can't really say that it's going to go up because it didn't disrespect the rest. So it's still holding that imbalance, and the price like that I said is my market structure shift, right? The one that I would have counted was initially just a retracement into this order block. This 15 minute order block, and you can if I remove this P&L, you can literally see this wick, right? Wigged into it, boom, went straight down. And as soon as I noticed that, I was like, all right, you know what? This is probably not a good trade, because first, unclear market structure shift, right? The wicks did the damage. Let's go. If you go back to it, right? Okay. The wicks did the damage, right? But it wasn't like a strong aggressive close, and I wouldn't. And you're probably like, oh, it is aggressive because this is massive candle going up and closing, right? But I wouldn't count that as aggressive market structure shift. So the structure shift wasn't good. The overall condition just didn't look nice, bro. It wasn't an A+ setup, right? And those are the only type of setups you want to catch. A+ setup. Any A minuses, B+, B-, alright, you don't want to catch those, because they're not, the probability of you winning that trade is very, it's less than an A+ setup, right? So you want to only catch the good trades, and at times when you don't see a good trade, you want to be disciplined and just avoid it, right? You want to just avoid it at all costs. So that's exactly what I did. I didn't take any trades. I was like, you know what, let's just see how this plays off. I waited. I still had my P&L out, right? I didn't enter any. I wasn't in a trade or anything. I just left it to see what happened, and you can literally see that as it went up, right? If I did enter this trade, right, I would have gotten out straight away, right? Like price came down, didn't even go up, bro, right? I wouldn't even be in profits, right? Literally, man, this trade would have been so bad. It would have been like a draining ass trade, right? But good thing I learned from my mistakes. I learned from my experience in trading in and out every day. Been doing this for like a year now, and this is what it's taught me. Having good intuition and not taking a trade that doesn't look 100% valid, right? So I would have gotten taken out, boom, straight away, and this just would have been a bad setup. So I avoided it, and I think that was the right decision to make, because clearly you can see it just keep on going down. And you know what? It's alright. I might have gotten my daily bias incorrect, right? But that's his name of the game, right? You can't be 100% correct. There's got to be times where you get things incorrect. But picking on that stuff, though, understanding that it's not going to do what you want to do, and just getting off the charts, I feel like that's the most important bit, and that's where everyone needs to learn. Avoiding losses. I made a previous video as well about avoiding losses, how I avoided one of the losses. And I'm going to keep on making trade recaps where, even though I don't trade, I'm going to still tell you guys how I avoided it, because that's, again, I'm just repeating myself, it's the most important thing, right? Taking only A+ setups and avoiding all the shitty ones, bro, because that's what's going to make you profitable. Yeah? Alright. So, that's all for today. I hope you guys liked it. Yeah, more trade recaps will be coming soon, more wins, and more losses too, because that's just the part of the game, bro. You gotta lose, you gotta win, and yeah. Catch you guys later.